opening price was a meet, predicted to be a little bit higher than the close yesterday around this gray box, and then it did hit. And the bump here is from the PMI, the Purchasing Managers Index, which kind of shows the strength of the economy, whether it's expanding or contracting. And it was a miss, so the dollar dropped really hard. And how the dollar index correlates to the S&P is inverse usually, and the reason for that is when the dollar goes up, the bond becomes more attractive to especially the foreign investors, or like foreign banks. So when it becomes more attractive, obviously people will chase the bond, and if when they are circulating money for profit, they would enter one or the other. So they would leave the stocks and then go into the bonds, or leave bonds and go into the stocks. And this could happen multiple times within a day, and a lot of arbitrageurs can do that as well. So that's basically what happened. So if we were to look at the dollar index right about here, which is, it came out like 9:45 this morning or something like that, the report. So 9:45 it starts to bump on the SPY and DXY around that time. Oh yeah, here. It would sink around that time pretty massively. So that's why this bump happens, and this is actually a great time to trade, which I did. And yesterday I talked about this, trading within this zone, using MACD overlapped with RSI, and that was the exact spot here. And when things go in there, when I want to be precise, I changed the time to 2 minutes. So here I entered around here, and then I exited on here. I didn't take any of these, I just moved from here to there. Let me see if I could show an example. Yeah, so it was just one contract. Yeah, so from here to here we could catch those based on this, the MACD. But first, you have to understand why this would happen, because yesterday's thesis, the thesis has to be clear in order to trade this one, otherwise you won't know when to exit. So you might hold it out until like here or there, and maybe not have the full profit. So the thesis yesterday was that it's going to be flat. The trading flat, by what I mean by flat is it opens and closes around that area. So this bump is kind of irregular thing because of the report, but basically today actually traded lower. So the thesis yesterday was, sentiment was, it's going to trade flat but a little bit bullish, because I thought we would trade around here. But it seems like there's a lot more fear than I thought, and this is all the Jackson Hole Symposium thing. Yeah, it doesn't seem like institutions are involved within the trading, except here, the big movement there. So having that said, it's going to go down to the open, and I would only trade up to that open. So that's what happened here. Thesis is important because that could determine when your exits will be. Because if my thesis was that it was going to trade flat, then there's no reason for me to hold or expect for this option to hit the next pivot. because it's not, I wasn't bearish because this is a put, and I wasn't bearish on the market itself, so I was just catching it to go back to the flat area, because this is just a response to whatever the report of that day. And looking ahead into tomorrow, which is a little bit of an extension to the PMI that suggests the expansion and contraction of the economy or the industry, is the durable goods purchase, and it is expected to be lower. So it appears to be the economy is actually tightening with the quantitative tightening. So I would expect to actually open lower than this. It looks like it's buying back a little bit in the after hour. So I would say it will catch up to maybe the 50 points here, and then fall back down below the pivot point. So I would say the pre-market to, there's going to be a little bit large range, but I would say a little bit lower. The fear is greater than I thought, so I think we will close lower, but this will catch up a little bit. And I think on Thursday there might be a anticipation to the symposium, so that it'll buy up on Thursday, especially with the preliminary GDP expectancy being even lower. So, or even even lower negative is what I mean. It's higher GDP. On Thursday we might see it going back up, but for tomorrow, I also think tomorrow will be slightly lower but flat. They won't trade until Thursday. So opening price prediction for tomorrow is between 411.75 to 413.58, and it's on the bear side of the flat market.